Hey guys, so I'm going to give you the correct answer whether it went to 8 or 24, and I'm going to tell you exactly why it moved in that direction. There's three main confluences, and let's go over them right now. Okay, so the first thing we notice is these series of green candles displacing over this bearish fair value gap and ultimately closing above the swing high here. So that's a displacement, that's a market structure shift, that's a change in the state of delivery. From there, we leave these equal highs here, and then relative equal highs up here. So there's a lot of generated liquidity up here. So price was running, changing the state of delivery, generating liquidity. So we're looking for price to come down into a discount. So how do we mark that out? We go to the bottom of the first green candle in the sequence, and then we take it from the top, from the bottom to the top of the run. Let's get rid of this real quick. Let's get rid of these two. So from the bottom to the top of the displacement range, we're looking for price to retrace into below the 50% level. So while price is underneath here, we're in the 50% level. And now we're looking for a fair value gap, a breaker block, some sort of PD array to, here, let me change this. This is a bullish fair value gap, so it's marked in blue. And it's a discount bullish fair value gap. So that's where we want to take our entry. And we're gonna put our stop loss at the low of this inversion. That's what I would do if I were to take this trade. You could also put it at the low of the fair value gap, which would give you even higher R. And then you're going to target, first partial would be here, second partial would be at this high, or even your terminus will be at this high. But no, I wouldn't put my stop there. I would put my stop at this inversion candle low. And then so that'd be about 4R, and let's see how this would play out. Bam. I mean, it really doesn't get any better than that. So just real quick, let's go over it one more time. We had this bullish displacement closing above this bearish fair value gap and also closing above this swing high. And then we have a retracement, or we have a generated liquidity up here. And then see, so this could be different if we did something like this, like chopped around here, and then we took this liquidity and then came down. I would not long it. Like, you would not want to get long there. But since we actually generated liquidity, we left this, equal highs here, relative equal highs up here, and then we retraced into a discount below the 50% of the displacement range, and we had a bullish fair value gap here. So that's where you want to take your entry. Stop loss, mine would be below this, in this bearish fair value gap, which is now an inversion. So let's just mark it out for now. I keep mine this color. See, that's too much going on, but you can see, like, this is the inversion. Keep your stop loss below that low, and then target this high up here. So if that helped you guys out at all, subscribe, and I will be making more videos like this. Peace.